This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And here we go. We finally got it. A green day. Snap the 18 trade losing streak. I have not had a single green day on the Express funded account. This is my first funded account. I know that the way I passed the evaluation was something that is repeatable and something that works, although the past 3 weeks now, I've been experiencing a lot of little mistakes that have been spoiling good trades. For example, on Tuesday, I literally bought the low for the morning session, but I get prematurely stopped out. You can see the executions. Buy here, stop out here, does this, and then I can't find a way to get on side. Again, buy here, stop out here, and it does this. So this exact thing has happened so many times. I know what I'm doing works. I know I have a good read on market. I know I have enough knowledge, enough market experience to make money in the market. I know I don't need to learn more. I know I don't need to change anything. I know my model works. It's just little things, little errors. But I know that eventually, when I do have a day like today where I'm confident in my read on price and I know where the market's going, then I just confidently execute on it, and I have a day like this. It's repeatable, which is what I'm aiming for. And I know I have a model, and I know I have an edge, and it works. If we look at my average win to loss for this week, go to this week, 4.57. I have one trade, that's 4.62 times what I risked. I did great this week, keeping my losing days at one trade. Another problem that I had, on the days that I get the bias incorrect, that typically leads to 2 losing trades. Not this week, not the case. I'm accepting that I'm wrong and I'm walking away. I'm getting out of the market. So let's get into it. What was I looking for going into today? So I already did my weekly review. It's already done. It's the first thing I did after this session is finished. So here we go, weekly review. Finished the week down, only $155. Not bad. My largest losing trade this week was an accident. It was completely an accident. But going back to today, Friday, November 7th, 2025. Trade Tell is geeking. Okay, here we go. So, how am I feeling? I'm confident in my read. What playbook am I looking for? Negative DGO, bearish discount gap opening setup, meaning market gap's down, and I'm expecting it to gap down and keep going down. Why? Because if you look at the higher time frame narrative, the direction of this weekly candle is clearly bearish, and I think we will see continuation down on Friday because of how Wednesday rebalanced the range, and Thursday created another leg lower. I'm looking for continuation down on the move lower overnight to make another down day. Market criteria supports that idea. Why? Because we have a large gap down opening, and I'm anticipating it to stay open because the drop down in the overnight session seems real to me. What do I mean by that? Let's look at the order flow from the overnight session on a 15-minute time frame. Why do I think the order flow from the overnight and pre-market session is the real move of the day? Why do I not think this is the Judas swing? Why do I not think that we're trading down to trade higher? Why do I think we're trading down to keep trading down? Because if we look at what we've done in the overnight session, what do we see here? We have a run on the Asia high, and look what the market does after running out this buy stops with a high. Large down candle produces new bearish premium arrays, which are respected. And when bearish premium arrays are respected, they produce new large down candles that have volume. Volume meaning it's a large candle. It has volume. Thick, full body, down close candle. So the market's making new premium arrays, respecting those premium arrays, and then creating new large down candles with volume. So if we look all the way up into the open, the order flow is respected and it remains bearish. This SIBI respected. This SIBI is a gap laid across an old low, and typically when you see that, you get continuation. So we have a gap laid over an old low. If we go to the higher time frame, 4 hour, what do we see? This entire move, this entire down move was started by the market laying a gap over an old low. That equals continuation. Now we have the same thing on the 15-minute time frame with the low from the overnight session, right? Huge gap laid down over that low. We get continuation of that. So now going into the open, I'm noting how we have smooth sell side here. Look at where the market is opening at 9:30, which is right here. We're creating smooth sell side. We're sitting at this low. We're consolidating. We're sitting at this low. When the market is bearish and we consolidate at lows like this and we sit down on lows, the market refuses to come up off that low, we typically stay heavy and we keep going lower. So we take this low, but we sit down on it. If we look at this 15-minute gap right here, where do all the bodies of the candles close? They all close below that gap. You don't see one single candle that closes on the low of that gap. They all close below it. That's a sign of weakness. On top of that, we have another PD array. The consequent encroachment of this old daily gap, that is in congruence with that. I'm going to change this so you can see it better. Not that. I'm going to do this and this. So there's the midpoint of that old daily gap. And then again, what do we see? All the bodies of candles closing below that. Go to the hourly, and it's the same story. This hourly candle closes below the midpoint of that gap. We have this premium wick here that I'm expecting to act as resistance. So if this hourly candle is closing below the consequent encroachment of that, we have relative equal lows here. I'm expecting the market to trade down. Again, what I said in yesterday's video, this is how I learned how to read price. This is how I learned how to trade ICT. It's where the bodies close. That's all you're looking for. That's it. So if the bodies of this candle closes below the midpoint of that, what is the subsequent candle, the following candle, going to do? Well, this is what it does as a result. And then eventually you see this happen so many times, that you begin to trust that this is what the following candle is going to do. So then you go to a higher time frame like the hourly, you see that the previous candle has closed below the midpoint of that, and then you start to trust that the next candle is going to be a down close candle, and that's all you need to be a day trader. You just need one hourly range to trade, and that's what I did today. So that's basically the whole rundown of my bias. Let's see if I missed anything. Annotations from the 15-minute time frame before the market opened. Candles have volume. I like the stop hunt before the drop down. We have a gap laid over the previous low here, and the candles are closing below consequent encroachment. So I'm using a PD array from the daily time frame to drive my bias on the lower time frame. How I'm anticipating the lower time frame to deliver is based on the reaction around that daily chart PD array, and that is what made all the difference today. The reason I got the bias incorrect on Thursday and Wednesday is because if I go to these screenshots, you're going to see that I have nothing annotated besides the new week opening gap, and that's it. This is the daily. This is the 4 hour. This is the 1 hour. This is the 15. There's nothing on there besides previous day settlement, new week opening. There's nothing from the daily chart that I'm using to get an idea of how this daily candle is going to paint. There's nothing there. So if I have no annotations, then I'm not taking into account the information that the market is giving me at that moment. Therefore, bias is extremely subjective. It's going to be completely open to my interpretation of what I think the market's going to do, just based on what I see, not based on the information that it's giving me in that moment. Well, today, the exact opposite is the case because I can see how the market is reacting to this discount array from the daily time frame. It's closing below the midpoint. That's a sign of weakness, so I know that I'm going to be a seller. On top of that, we also have a large gap down opening. This weekly range is bearish. I'm looking for lower prices. So I simply state in my pre-market plan, go back to Friday. Since down candles have volume, bearish order flow is being respected, price is closing below consequent encroachment of the old daily BISI, it sets up smooth sell side pre-market, which we're going to open up off of. I want to be a seller early into the open if price continues to reject the daily BISI and 15-minute SIBI targeting pre-market sell side and potentially October 23rd low. So that's my objective. You can see that I'm saying that. Potentially targeting October 23rd low, and that's what I targeted. If we go to the recording, sessions 11:07. I mean, it just happened right at the open. The recording is literally 17 minutes long. That's it. So what do I see in this moment on the 1 minute time frame to confirm that the market is going lower at 9:30? Well, I notice how the 9:30 candle, what does it do? First thing that is open, trades up. This red box is that 15-minute SIBI. Rejects the low, closed below it. Again, algorithmic indication of weakness. Falling down candle, boom, large down candle. So it's the same thing that I just told you on the hourly time frame, where we saw the hourly candle closing below the consequent encroachment of the gap here. Right? So we can trust the following candle is going to go do this. It's the same thing on the 1 minute time frame. If this candle rejects that gap like this, closing below it, what is the subsequent candle going to do? Well, this is the reaction that you get. Then I just wait for a gap to form, and I sell that gap, and that's it. Now my stop loss is going to go with the high of this gap because I'm anticipating it to stay open for these 930 setups. Typically what the market does is it'll create a large gap like this and it'll leave that gap open and just stay heavy and just keep leaving. So my stop loss does not have to go at the high of this fair value gap. It can actually go right, or the high of candle 2 can go at the high of the fair value gap. I'm anticipating that gap to stay open. I annotate this yellow box because I want to see this act as order block. The market trades up into the SIBI and then leaves it. I want to see this up candle act as a bearish order block, so I'm annotating the midpoint of that right there. I see that this candle opens, trades up, but closed below the mean threshold, the midpoint. That's a sign of weakness. That tells me this trade is still good. And then I'm targeting, again, October 23rd, daily low. And that's it. Bread and butter, very easy. Exactly what I was looking for, exactly what I planned for. In and out, very quick. And that's it. Just going for low-hanging fruit objective. And I'm going to slowly piece away at this fat-ass drawdown that I am in. Because, again, I know what I'm doing works. I just have to repeat it. There's been a lot of faults on my end that I've been making as the operator of this model. But I know that this model works. It does work. It is an edge in the marketplace, as you can see today. It just takes the patience to wait for these days to set up where the market is more high probability, and I know exactly what I'm looking for, and then just executing on it with confidence. But it is very dependent on bias. Like I'm trading in the right direction. I want to be trading in the right direction all the time. I don't have to, but that is the aim. That's typically what leads to my best sessions. I don't have to get the direction of the daily candle correct to make money, but those are my best trading days. Like, I can get the bias wrong and still pull some money out of the market because I take partials, pay the trader. But ideally, I am getting the direction of the daily candlestick correct so that I can capitalize on larger swings like this. I don't hold for more. I'm just getting in. I'm just getting out because I'm trying to piece my way out of this drawdown. Okay, I'm not looking to hit a home run, which is another point, another huge lesson from everything that I'm experiencing right now in my trading. Being in so much drawdown has actually forced me to dial down the difficulty of trading. Now, I make trading extremely difficult because I want to be a really good trader. Me just being a 21-year-old young male, super ambitious, super driven. That's what we all want to do, right? We all have an ego. We all want to strive for big things. We all want to be the best. We all want to be the greatest of all time. But in this game, that is going to be to your detriment. It's going to hold you back. And it does, because you're going to make things harder than it has to be. You're going to come to the market demanding that you're right every single trading day. You're going to come to the market demanding that it gives you exactly what you're looking for. And if it doesn't, you won't even take profits because the market hasn't given you what you're looking for. I've had so many trades come back on me, stop me out for break even or even a loss because it didn't deliver the level that I was looking for. And I never pulled out any equity from that trade. And that's all because of ego. It's all an ego thing. It's all because I want to catch these huge swings. I want to sell the highest high and I want to buy back at the lowest low and pin the high a day and pin the low a day and do this and do that and do backflips and do cartwheels, whatever. That's all ego. That is all ego, and it holds you back. So you can literally adjust the dial of difficulty of this game, of trading, by being content and being humble versus coming to the market with an ego, wanting to be the best, trying to sell the highest high and buy the lowest low, do 10 backflips, all that. It's completely up to you. So if I just come to the market and I look, I'm only looking for 50 to 100 points, and that's it. I don't care what the rest of the session does. All I'm looking for is this little piece of the pie to where I can consistently feed myself, and that's all I need to do. So being put in this position of large drawdown, right? I am literally $1,400 in drawdown on this account, although it was worse. We had an equity low of being down at $1,600, almost $1,700. Came back up off that today. Now I'm down $1,400. So I came very close to blowing the account. Today is a step in the right direction, just piecing away at it one thing at a time. I'm sorry, this dog is distracting me in the background. He's literally an animal. He's like 60 pounds. He's huge. Just makes a bunch of noise. What I was saying, what even was up? Damn it, dog. Lost my train of thought. Anyways, it has a lot to do with ego and overconfidence and how that affects your performance. I mean, look at this. I lost $600 in one day. This is right after I passed the eval. I was on cloud nine. I'm thinking, oh, I've got this, man. This is so easy. I got this. I just come to the market to do the same thing over and over and over again. That's it. I'm a good trader. I've already got it. I'm going to start making a shit ton of money, and it's going to happen right now. That's when you come to the market. That's when you stop respecting the risk that is real in these markets. That's when you start demanding that it gives you everything that you're looking for. You go for these huge take profits, this and that, and you start making a lot of mistakes, and your system begins to fall apart. Your behavior begins to fall out of line, and everything starts to crumble as a result. This should have been a green day. I don't really remember what went on for the rest of these days, but I guarantee there's other instances in here that should have also been a green day. Bro, what is this dog doing? Look at this. Kane! What are you doing, bro? He's like rolling around and shit on the floor. Bro, I'm trying to make a video here. Come on. Okay, now he wants to stop. That boy got camera shy. Okay. I have it on a journal entry. Like, it's all right here. See if I can read it a bit. Let's see. Make trading easy. I know being in the hole, being in a lot of drawdown is for the better. I'm forced to trade. Dude, I can't even read my own handwriting. This is so annoying. I am forced to trade content and pick low-hanging fruit objectives. I am confident price can deliver. The more concerned I am about being right about the direction of the daily candle, the harder the game is. The more I demand it give me all targets I am looking for, the harder it becomes. This game has a dial of difficulty that I can very easily crank up and put on max. By the same token, I can dial it back and put it on easy mode. Turn it up by demanding precision and bias all the time. Turn it down by focusing on where price can move in the next 30 minutes that would provide something I can capitalize on. Turn it up by holding for more, demanding market hit all the profits, the take profits I am looking for. Turn it down by just looking for my piece of the pie. The more you demand, the more difficult it becomes. It's not going to do anything you want it to do. You have to be humble. You have to be content. Think about it. When I passed the eval, I was on cloud 9. I thought I had it all. I thought it was easy. Confidence was through the roof. Confidence gives up your respective risk. I stopped respecting the real risk, which led to a $600 loss in one day, which I just pointed out. Following that, I demand market give me exactly the level I'm looking for and refuse to partial. What could have cut back on drawdown actually added on to it, and that was the following day. Like here I had a solid setup, but I just refused to take profit. Again, the more you demand, the more you turn up the difficulty dial. The more humble and content you are, you become easily rewarded. The objective is to feed yourself, not be the best or show everybody else what you can do. Turn the dial down. I've made shit so much harder than it has to be, demanding everything. I have to get humbled and put in a position of max drawdown to figure out what that's done to me. Now I am forced to slowly work out a drawdown or risk blowing the account. It takes a very humble man to succeed in this game. I think of all the days I got bias incorrect and went 0-2 simply because I couldn't accept I was incorrect about bias or wasn't aware at all. The past 2 days I was able to keep it at one loss because I simply see what's in the chart. I look at the 4 hour/1 hour. Okay, I can't even read my handwriting. But anyways, you get the idea. To succeed in this game, you have to be extremely content and humble. Like, you have to just come to the market looking for your piece of pie, get in, get out, and be done. And I haven't been doing that. If you trade that way, you make this game a lot easier. But if you don't, if you do the opposite, if you do what I've been doing for past 3 weeks now since I passed the eval, then you turn up the difficulty dial. You do, Nobody else does. You do. You make this a lot harder than it has to be. So hopefully you can learn from my mistake. And this is how I've made trading so much harder than it has to be, by carrying my ego into the market and just demanding that it gives me exactly what I'm looking for all the time. That's dude, just feed yourself. Just go into the market, just look for 50 to 100 points in the Nasdaq. It's really easy in the volatility that we have right now, and that's it, and be done. Which is what I did today, and it's so easy. I'm like, oh damn, that was 10 minutes, and I was in and out. Wow, okay, dude, that's it. All right, so that's it for this one. I'll talk to you guys potentially tomorrow with a weekly review.